Hi everybody, this is Ellman, the Blue Collar Investor. I just got back from my morning workout, so that means it's time for another Ask Alan video, or today's covered call writing question of the day. And today's question comes from Eli, who lives in Israel. And Eli asks about my overall market assessment, which I publish at the end of my weekly newsletters and also in our premium stock reports. Eli asks, Alan, what does the following line in the weekly stock report mean? BCI is moderately bullish, favoring out-of-the-money strikes 3-2. Well, Eli, let's show our viewers first the area of the newsletter that you're referencing. As you could see on the screenshot in front of you, at the end of my weekly newsletter article, I publish an area called the summary, or the overall market summary. And I mention what IBD's assessment is and then BCI. And here you see the line that you referenced, moderately bullish, favoring out-of-the-money strikes 3-2. So let's take a look at the criteria that I use in determining my overall market assessment, or my bullish-bearish stance at that point in time. And basically I use three criteria. First, chart of the S&P 500, or the broad market index. And I use a 6-month chart, and I take a look at the trend, I take a look at the momentum, and I make an overall assessment as to whether or not it's bullish or bearish or someplace in between. The second criteria I use is the CBOE volatility index, called the VIX, or the investor fear gauge. And what they do here is they take the call and put options over the next month, and they make a determination as to what the market is anticipating over the next 30 days in terms of price movement. Generally speaking, the VIX is inversely related to the S&P 500, so in a sense it's a confirming criteria. But also, if the VIX is above 30, I consider that a major red flag, and I'd be majorly concerned about the market during the next 30 days. It might be way too volatile, in which case I would take a very conservative stance. Also, a VIX between 20 and 30 is a red flag as well, just not to the extent as if the VIX were over 30. Now, a VIX under 20 is a calming VIX, particularly if it's declining, and something that I would consider a bullish signal. Now, the third criteria I use are the weekly economic reports, which I do publish during my weekly newsletter and also in our premium stock reports. So it's there for our premium and general members to see a summary of all the weekly economic reports. And I take these three criteria, I put them all together, and I make a general market assessment. Now, once that assessment is made, I make a determination as to the percentile I'll be using regarding in-the-money and out-of-the-money strikes. When I say I'm favoring out-of-the-money strikes 3-2, basically it means just that. 60% of my positions will be out-of-the-money strikes and 40% will be in-the-money strikes. Keep in mind that this is just a guideline, it's not etched in stone, so I may veer from it a little bit. And of course, this is just one man's opinion. You know, if your market assessment is different than mine, feel free to adjust accordingly. But many members are interested in what I'm doing, and I'm happy to share that with you. So an in-the-money strike is a much more conservative stance to take, and that will give you a very good 1-month return with a protection of that profit. So in a bearish market environment or a volatile market environment, I would tend to favor in-the-money strikes. The out-of-the-money strike is a much more aggressive stance to take. That still gives you a good 1-month return, plus the opportunity to generate additional cash from share appreciation up to the strike price. So again, in a bull market or when you are more confident in the overall market, you might go with more out-of-the-money strikes. Now, for those of you who are not premium members or do not subscribe to our weekly newsletter where you can access this information, let me share with you how you can get free subscription to our weekly newsletter. Simply go to the website, thebluecollarinvestor.com, and the blog link, so /blog. Scroll down on the right-hand side, as you can see in the screenshot in front of you. There's a very brief form to fill out. and you will get access to our weekly newsletter. It'll be sent to your mailbox at 10 a.m. Eastern Standard Time every Sunday morning. So Eli, thank you very much for that question, and in particular, thank you so much for being an international member of the Blue Collar Investor. And thanks to all of you out there for viewing this video. I hope you found it helpful. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.